Hello, everybody. This is Noah and John. It's your Memorial Day weekend special over here at UrbanDigs, and this is Friday. So you're going to get your weekly Manhattan market update. John, let's get right to it. I'm looking at supply 7168, ticking down. Show me that chart.
7168, Noah, that's down 3%, and that's not to be unexpected. I mean, we're heading into a holiday weekend. It's toward the close of the active season, so I mean, this is sort of to be expected.
Exactly. You're going to have a lot of little weird things happening on the holiday weeks, especially now that we have a ticker that we break down weekly trends. You know, we have a holiday week. You're going to see some weird things. So just keep that in mind. Yeah. Let's move on to pending sales, our measure of demand. That just keeps going up. 53, 56. I remember when 5K was a thing. We're like, are we going to break that? Look at us now. Johnny, show me that chart.
Yeah, and that is up another 2% or so from the week before. And so whereas if you're looking at supply and supply is kind of dwindling down, pending sales just keeps on ticking up. And that is just amazing to watch.
Yeah, and as a result of that, our market pulse is at 75. We're kind of near our highs on market pulse. If you want an idea of leverage in the real-time market, I mean, do you remember when that was in the 0.2s back in a year ago and you just watched it recover? It's quite incredible to watch this pulse. If you do not follow the market pulse on UrbanDigs, get on the game and watch that thing. Let's switch to the weeklies, John. I'm looking at the 1 week. Supply came in at 388. That is the Memorial Day holiday impact effect in real time. Show me your chart.
Yeah, no, you're exactly right. That's almost 40% lower than the week before. And, you know, you're exactly right. This is heading into the holiday season. No one's really going to, holiday weekend, I suppose. No one wants to put something on the market if no one's going to watch it at an open house this weekend. So we took a hit there. But that might be good for the city. You know, keep the volume down a little bit on the supply side to keep the demand a little bit more frothy.
Yeah, it is what it is. And we all need a break. So this is all good stuff. Contract signed, that is down as well to 378. I believe this is one of the first times we're getting down around these levels in the 370s. But you tell me the best, John. Show me that chart.
Yeah, I mean, to think that, you know, we're talking about 378 as a decrease from 4% from a week ago would be insane. Pretty much in most months, if you're talking about 378 as a decrease in contract size on a weekly level. But that's where we are. We're down 4%. And that's just because it's a decrease, I don't want to take anything away. I mean, people are out there. Buyers are signing contracts left and right, and we're still seeing that in the numbers.
Yeah, it's very important to understand. We're at ludicrous level. We are at record levels. We are still in record levels. This is record territory. Just to give you an idea of what we used to see a weekly pace of 250 to 300. That's a strong market. 250 to 300 is a strong market. Seeing 370, 400, that's just, again, ludicrous overdrive speed. It is what it is until it goes back to normal. So we'll just keep an eye on that. Let's move on. Everybody loves this chart. We're looking at Manhattan negotiability at the time of contract signing, at the time of the deal. It's as real time as you can get. Johnny, tell us what we're looking at here.
Yeah, so no, that's exactly what this is. And we're basically bucketing all of the sales by when they were signed in contract and then looking at the median listing discount for those sales. So if you signed it in, say, January, and maybe it closed several months later, we're going to include that in the January bar because that's when the deal was signed. That's when the parties came together. And I think it's a much more linear look at the market. It's a much more cleaner look at the market. And it kind of gives you a sense of what's actually happening versus, you know, when you just bundle things by closed sales and you get different sort of market periods together.
Yeah, and you know, this May bar right here, this data right here, that means somebody signed in May and closed in May. Yeah. So that's there's not a lot of those. There's only a few hundred of those, and those are probably cash deals. So I cleared that into a lighter color to show you that's incomplete. But I am looking at April. There's a good 1,300 deals in this bucket. That is enough.
Yeah.
And when I look at this and I see that trend change, the first thing I wonder is one month is not a trend make, but it's a notable trend. And I have seen what the market has been doing. So that makes sense. It fits the narrative. And the second thing is, what is the message? Right. What is the message here? Brokers need to understand to sellers, what this is telling you is that the latest data that we have, the most reliable data that we have going back to April, okay, is telling us that if you're pricing at $1 million, you're going to ultimately sell this thing at 950. That's what this is saying. Now, if you break up that space between $1 million and 950, that is two things. That is a price reduction, and then that is a negotiation. Okay, so this data is telling us that the negotiation is going to be 2%. That's going to be 2%. So that means that the price reduction is going to be 3%. So this guy, this hypothetical seller, his process, his flow is, I'm going to lower the price down to 970, and then I'm going to have to negotiate down to 950. And that's what the data is telling me. So if any sellers haven't gotten to this process or haven't had that first price reduction, at least you could see what the actual data is telling us on what the market is doing.
Right. And, of course, the flip side, Noah, is if you're having a conversation with a buyer, the shrinking of those bars should give you an idea, sort of visual idea of the competition you're facing. So if previously you could expect, say, maybe 8% from the original ask as that's sort of your ballpark, that's your goal, that's no longer the case. Now you're looking at more like 5%. And that's
I look at
more people out
negotiation
there
as an
shopping for the
individual
same
thing.
stuff.
Yeah, I always look at it as an individual thing, negotiation. That's a great point. I always looked at it as like relative to how someone priced their property, relative to the actual unit attributes, the unit features. But your point is extremely valid, because that trend change right there, that's the leverage scenario. So that's the whole thing. And that's just one signal of many. You combine this with another signal right here. That's a seller's market. Add all these signals up, and it's telling you exactly what the market's doing. That's why data is good.
Yeah. And, no, I mean, honestly, a lot of agents are still getting clients, buy-side clients saying, hey, where's the COVID discount? I'm reading about this COVID discount. I want to get a deal.
Yeah.
And, for months we've been talking that there is no COVID discount. And this actually shows it, because you have those discounts ticking up as volume was increasing December, January, February, and it just fell off a cliff. And it falls off a cliff because there's a lot more competition out there right now. So it's a completely different market than you're expecting, Mr. Buyer.
And in a couple more months, this chart, I believe, is going to continue that trend. So we'll keep an eye on that for you. That is John Walkup. I am Noah Rosenblatt. We're both of UrbanDigs. Please check out the latest videos we do of the Manhattan resale price trends, a look at major support trend lines right over here. I think you'll love it. And if you have any questions or answers on the Manhattan market, we have our forum right over here. Other than that, have a wonderful and safe Memorial Day weekend, and we'll catch you next time.